So, good morning, good afternoon, good evening to everyone, and welcome to this second session of the webinar on cross-border interlinking of fast payment systems, jointly organized by Banca d'Italia and Monetary Authority of Singapore in the context of the Italian G20 presidency. My name is Claudio Impegna. I am the head of the Markets and Payment System Oversight Directorate in Banca d'Italia. In the context of the Cross-Border Payments Roadmap, which was mentioned this morning, I'm also the co-chair of the work stream dedicated to interoperability among systems. In this session, we'll continue to discuss the important issues concerning the interlinking raised in the morning. My idea is that thanks to our distinguished speakers, we'll be able to explore a bit in depth the respective roles that can be played in this game by standard setting bodies, authorities, central banks, and market players, market stakeholders, which encompass payment system providers and FMIs, financial market infrastructure as well. There is no need to stress the importance of cooperation and collaboration among the different stakeholders in the network economy represented by the payment systems area. When it comes to the interlinking issue, we know that public and private actors share common views, some common views on the best way to carry forward this kind of projects, but they do also have different sensitivities, different demands on how to do that in a more efficient and effective way. So we know that there are differences in business, technical, legal contexts and environments in which interlinking can be introduced and is planned to be introduced in some areas. And so for that reason, it will be interesting to have witnesses of this kind now in this afternoon, morning or evening. First, let me thank all the speakers who will contribute to this session. Thank you also to the organizing committee. Then just a few housekeeping points from my side. As you know, the webinar is being recorded, so it will be possible to replay the recording of this event on the official YouTube channel of Banca d'Italia. Then I ask you to turn off your cameras and microphone for better connectivity. And of course, please feel free to pose questions in the Q&A box at any point. The Q&A box is located at the lower right-hand corner of your screen. If time allows, I'll invite the speakers to respond to selected questions at the end of their presentation. And the interest of time, maybe a selection of questions could be necessary. And of course, broader questions and issues of broader nature could be submitted to the general audience during the general discussion part of this session that we'll have later on. Now, I have the pleasure to let the floor to Mr. João Pinho de Mello. He's the Deputy Governor of the Central Bank of Brazil for Licensing and Resolution. Mr. de Mello has a deep institutional experience at the central bank now, but before, if I'm not wrong, also at the Ministry of Economy. So with a special focus on financial innovation. So here we have a combined technical and market and institutional background experience, which is quite valuable for us. And so his witness in the field of the fast payment systems is quite appreciated. And so I stop here and then over to you, Joao. Can you hear me? Maybe you are presenting something. Okay.
Yes, now I was having difficulty with them. cursor on my mouse. Thanks a lot, Claudio. I'm honored to be here. It's a real pleasure. I think the way that I can most contribute to the topic of this panel is by showing this experience that we had here in Brazil with designing, implementing, launching, and now seeing it through a fast payment system. And I will touch on several of the what I believe to be the key economic issues that I think we all face in payments in general, and evidently in fast payments as well. But I think they tend to be more general, I believe. I will share some slides. Let me try and see if successful here. I'm assuming we can all see the slides.
Yes, it's perfect.
We can.
Thank you.
Yeah.
Right, great. So I'll talk about PIX, this fast payment facility that we had launched almost exactly a year ago. But I'll also touch the issue of the interrelationship between the Brazilian Central Bank as a payment scheme owner, in the case of PIX, and as the regulator of other payment schemes. So here, PIX is just it's a new way to pay and transfer money. New in the sense of for the case of Brazil. Let me give you a little bit of an overview and some of what I believe to be some accomplishments that PIX has already had. I think the context here is Brazil is a middle-income country with with a particularly high penetration of smartphones. Given at the same time, our economy has had a relatively high use of cash for several reasons, which are not all of them pertain to this panel. Brazil has a successful history in payments, especially with the bill payment and the plastic industry, debit, prepaid, and credit cards. And also on the acquiring business, sorry. But despite this success, if you look at Brazil and Latin America in general, transaction costs for card payments, I use the term card in general, shall include prepaid, debit, and credit. Transaction costs are relatively high, despite the fact that we have gone through the path of directly regulating interchange fees for debit cards following other countries' experiences. So we had this context here. High penetration of smartphones, but despite of that, a high usage of cash, and a debit and a plastic industry that has had many accomplishments, has been successful, but with a still a relatively high cost. That's certainly true for Brazil, and it's probably true for Latin America in general. At the same time, we had this international trend, and other countries that have adopted fast payment systems. So looking at these facts, the Banco Central do Brasil has, since probably 2015 or 2014, been trying to stimulate private actors to come up with a fast payment initiative that had to be interoperable, low cost, and available 24/7, and obviously fast. By the end of roughly 2017, I wasn't here, but the story goes that the central bank came to a conclusion that private actors were having difficulty overcoming coordination problems towards launching such an initiative, and decided to take the lead and start studying the centralized provision of a settlement infrastructure, of a database of aliases to easily recognize payees, and also have a regulatory framework that is being the owner of the rule book here, or the payment scheme. The main features or attributes that the central bank wanted this fast payment system to have was, well, it had to be instant. It had to be convenient in the sense that using or making a payment here had to be easy. And I'll go into details. I'll be less fluffy about what being easy means. It had to be multi-purpose, in the sense that we envisioned a platform or an ecosystem that could be used for P2P, P2B, B2P, P2G, G2P, or whatever use that for payments that you might envision. The platform would have to be sufficiently flexible to accommodate it. Very, very important. It had to be an open, interoperable environment. Basically, there was an idea here of starting fresh. Let's start anew from scratch, and let's have a platform that everybody has the same shot of participating in. When I mean everybody, I mean PSPs, payment service providers. Had to be agnostic to whatever participant is on the payer and on the payee side, meaning that no discrimination, no verticalization, to avoid some of the features that have fraught or hampered the full efficiency of other digital payments. Again, I repeat, I emphasize full efficient, in the meaning that we have a very efficient plastic industry. It's just that since we were, doing from scratch with PIX, we might as well just do it in an infrastructure that would minimize the possibility of anti-competitive behavior in the future. It had to be full-time available. It had to be round the clock. It had to be very, very low cost, because marginal cost is very, very low, in fact, given the available technology. In fact, we imposed that PIX is for consumers, meaning the P side, we imposed that is free of charge. And we haven't regulated fees on businesses, because this is where participants will remunerate themselves using PIX. But we firmly believe, and we closely monitor competition here, so that competition will deliver a low cost use for businesses. It had to be integrated, meaning that settlement and information had to go together instantaneously as well. This is to improve automation and reconciliation capabilities for businesses and governments, and eventually for consumers as well. And last but not least, had to be extremely safe. Just to give you some numbers, during this graph here at the right-hand side of the slide is as of September, that is during the 10 first months, PIX grew. Like CAGR is fantastically high. We had over a billion transactions with PIX in the month of September. Overall, like almost 5 billion transactions and 3.5 trillion reais. That's roughly $600 billion in financial volume. We had at that point registered 330 million what we call PIX keys, which are basically aliases. It's your email or your email address or your mobile number or your tax identification number that identifies you as or QR codes that identify you as a payee. And more than 100 million users, meaning that people that have registered PIX keys to be easily identified as payees. Now, if you didn't register a PIX key, you also part of PIX, because you can always receive a PIX using what we call the traditional methods of initiation. It's basically your bank number, your branch number, your account number. More 7.6 million companies here using this means of payment, which are about a little more than 50% of all companies that have some relationship with the national financial system here. We already have multiple users. PIX has caught on very quickly for P2P transactions, but it's gradually increasing and growing in P2B and other types of transactions. Obviously, onboarding of P2B is is naturally a little slower. There is a chicken and egg game here. We solved it for PSPs, but obviously we don't have the mandate to impose that retailers, for instance, accept payments with PIX. So but it grew tremendous. It grew as a fraction over a base that is the P2B that is growing very, very fast. Now, just for a comparison, as of the second quarter of this year, PIX was already surpassed all the other type of wire transfers and bank transfers, and represented about 60% of debit transactions, which is quite frankly pretty impressive. If you look at this number in more recently, because the data for debit and credit transactions we receive on a quarterly basis from the industry, but it's probably getting very close at this point. Now, for an international comparison, the data that we have, this graph is the horizontal axis is the number of years from adoption. The vertical axis is the number of users, the number of transactions per person. And we still have some other jurisdictions that have higher penetration, the Scandinavian countries. But in terms of speed, I think the fastest here was Chile, according to the data that we have available, that in the first year had some 9 transactions per inhabitant, per person, and PIX has already at this point, that was before, almost 30. There's this number that I have to say that we're proud of, which is the number on financial inclusion, which for an emerging economy like Brazil is pretty important. We have 43 million users that had not done any type of bank transaction the year previous to the launching of PIX, and that have done so for the first time using PIX since the launching of PIX. That's our proxy of inclusion, which is it's a big number, even considering Brazil's population to be around 212 million. Now, as I said, the central bank led the way and is providing the infrastructure here. The Brazilian central bank does not provide any payment service directly to clients, meaning consumers, individuals, or companies. The central bank provides this infrastructure, settlement infrastructure. It provides this database of aliases, meaning that when you make a PIX transaction and you use one of the PIX keys, it goes to the central bank database. The bank authenticates the payer. The central bank, the PSP bank or fintech, whatever, credit union, will authenticate the payer, obviously. But the receiver, the payee, will be identified by the central bank's database, and then the PSP, the payee's PSP is notified, so that the money is transferred to the right person. Now, we have several actors here. We have the payers, PSP, or the beneficiary or the payees, PSP. We have the figure of a payment initiator here in PIX, and they are now onboarding payment initiators. Central bank plays these two operational roles, and is also the scheme owner. I mean, the PIX rule book is the central banks. Now, when I said that it has to be acknowledged that the Brazilian central bank has used to its full extent its mandate here, given by law, to onboard and solve the network externalities and coordination challenges that are typical from payment schemes. Solved it partially, let's say, by making it mandatory that banks, fintechs, or payment institutions and credit unions over a certain size, it's mandatory that they participate. Therefore, payers and payees, we kicked off with 90%, 95% of the transactional accounts in the country being in the platform. Now, people have to want to use it. We have used a regulatory mandate to make the user experience very smooth and stealth in PIX, meaning that we mandated, for instance, that when you open your bank's or your payment institution's app, that the icon for PIX is in the first screen. We have heavy-handed mandated a lot of features of user experience. It's open, everybody's there.
Sorry, Joao, sorry to interrupt you. I would ask you to conclude in few minutes, if possible.
Right.
Then we have,
I'll wrap up in a couple of minutes. Sorry.
Yeah. Sorry.
I think this slide is pretty important. So implementation here was a mixture of the regulatory mandate that we have and a co-participation and co-creation scheme with the industry. We created this governance body, which we call PIX Forum, where the industry is all there, but not only the payment industry, but also all other stakeholders, such as, for instance, retailers or telcos. And everybody's designed within the working groups of this PIX Forum, but the final decision is a central bank in the form of a regulation. We are now engaging in several of the cross-border initiatives that are very important for us. We hope that to achieve inclusion, efficiency, and strong competition for payments, not only in PIX, but for others as well with these platforms. And with this, I'll wrap up. Sorry if I got carried away.
No. Many thanks. We are perfectly in time. Okay, yes, quite informative. Again, this issue of different roles and the involvement that you set up at the central bank of private players. It's an experience that we are making everywhere. Now we have Marc Bail de Gessé, our next speaker. Marc was appointed CEO of the CLS system at the end of 2019, but before that, I remember Mark at the ECB, he was the Director General for Market Infrastructure and Payments, and so we met in this group and also at the MIB several times. Also at the BIS CPMI committee, the committee for market infrastructure and payments. And so again, here we have the witness of a combined experience, both from the private and the public side. And it will be important to listen to you, Mark. Please, you have the floor.
Thank you, Claudio. Very nice to see you. I would have preferred to be in person, obviously, in Roma.
Everyone.
Being able, yeah. Great to see you and to see all the names around the program you have put in place together with MAS. Really a very nice conference topic, very important, dear to my heart from my past, but also from today's experience from CLS side. I have some slide. I don't know if you will put it on screen or how does it work?
I can do it for you. Just a second.
Yep, thank you. So to present what CLS is about in a way and why it is important and what is a challenge to interconnect payment system beyond the technicalities of this, thank you, challenge. So strengthening the resilience and efficiency of the FX ecosystem is at the heart of what CLS is. In fact, it is our purpose. It's exactly our purpose statement to be there to create this efficiency in the system. And somehow CLS as being a financial market infrastructure, next slide please, which has been created completely in the role of playing a role of the central of the FX ecosystem, bringing financial stability into this context and allowing the interconnection between the various currencies to provide, in fact, for a smooth functioning of the processing of payments when there is a payment against payment to do, and put in place a principle of having a very standardized and centralized mechanism which allows to settle across different currencies safely without principal risk. That has been really at the heart of the definition of the role of CLS from the start, which has been from the start an undertaking which has associated public and private sector. So CPMI or its predecessor, the CPSS, has been at the birth as much as the banks needing to find solution of this solution that has brought payment versus payment mechanism to really have this put in place. So it is very important for us to show the solidity in terms of resilience and the stability that we are bringing to the system. This has brought us into creating a system about 20 years ago. So we will celebrate the 20 years anniversary of CLS in 2022 next year. And it's a good time to look at what we have brought in terms of reducing risks in this context, both liquidity and credit risks that are exposed into the FX context, where there is a very strong operational constraints due to the fact that all payment system by definition are domestic focused. They are servicing their domestic market and they are not towards external markets much. And therefore you need to find a way to bring that together. Maybe in a nutshell, next slide, please. I would like to define a bit what is CLS today. Today, CLS every day is bringing a service of stability, which settled about, on average, more than 6 trillion USD equivalent every day. This is an enormous amount compared to what we settle in the RTGSs that we have all over the world. It's quite big. It's probably the biggest payment system if we look at the value settled per day. It covers 18 major currencies globally. More than 70 settlement members, which are basically the big actors in the FX space. Behind them, there is a network of connected indirect participants, third parties, as we call it here, of more than 28,000 of them. They represent funds, they represent some corporates, some banks, which are not directly settling, but using the services of a settlement member to settle in all those currencies. So a big ecosystem with a lot of volumes, which have to absorb all this context. Another big strength of CLS is in fact the context in which we operate, which is a global context. And this relies on a global oversight function. Next slide, please, which shows the complexity of being operating in more than one jurisdiction. In fact, we have a college of central banks, all the central banks of which we settle the currency, which are composing our oversight committee. So 23 central banks for 18 currencies, the euro having more than one central bank, as you know. Amongst which, obviously, both of you, in a certain way, Banca d'Italia and MAS are part of our oversight committee, who is steered by the Federal Reserve system. And we are, in fact, directly supervised as a bank, a special purpose bank in a certain way, but as a bank by the Federal Reserve Bank, New York, who is our, therefore, supervisor. This brings us a very strong solidity, and behind this, obviously, we have the whole role that has been set up by the CPMI, defining the PFMIs, which we have to fulfill. And this gives us a very strong, I would say, stability base, as we have to fulfill all those requirements to be able to continue to operate in the context in which we are. So, very important context in which we are operating, very strong oversight, at the same time, a broad base on which we rely to take decision. Next slide, please. Which is our board, which is composed as much of, I would say, independent directors, which are former, I would say, person who had responsibility in the field of FX settlement in a broad way, or in the FMI context, or in the risk context. So we have a good knowledge base, very knowledgeable independent directors, as much as we have shareholder representation. Our shareholders are the bank settlement members primarily, and from them also we have a variety of senior persons from those institutions. This gives us the possibility to have both sides in this steering of our function. Both the side from the, I would say, SMEs, who knows exactly how are the challenges that we are facing on the risk side, or on the development of our ecosystem and the challenges we have ahead of it, as much as we understand the needs of the banks in this context to see how they are challenged in developing and being able to answer the challenges of the ecosystem in which we are. So it's a strong also angle. This both part, public, private, again, is a bit the image I am giving here. Our board is more private, but the oversight committee is public, and we have this interface between the two, which make a very strong context to operate and to get a good feeling of what are the good directions that we can take for the ecosystem in which we are. CLS in the middle, next slide, please, is providing, therefore, a connection between somehow those two worlds, and is providing the possibility to translate the needs which are coming from the FX ecosystem that we can see with the different key actors that we see in this system, to deliver for the market, which is more the bottom part here somehow of what we are using to deliver this payment versus payment mechanism to which we deliver every day these volumes that I was mentioning earlier. So different category of factors on which we rely, different context on which we rely. So we are somehow interconnecting already today, and that's one of the core topics of your conference, 18 RGGS systems, which are connected to CLS. 18 systems, which again have been strengthened over the year and continue to be strengthened, in particular in the context where now they are updating their ISO 20022, let's say, transition that we have to connect to us, which each of those systems are very solid in their market infrastructure, but are definitely focused on their local context, on their local currency context, which is normal, the top priority, obviously, for them, and which is also relying primarily on the local money market constraints in terms of opening and closing time, which we have to take into account when you are in a world where we have to be the interface between those different currencies. So that's where the challenge, I think, is coming very strongly for us, and where we can rely strongly on our, I would say, base to find a good solution to deliver efficient settlement process for the market. So that's the key on which we rely. We are using also ecosystem partners to deliver stronger services as much as we can, and therefore have a different base that we can use to deliver in our ecosystem, which is also containing IT providers that we have to take into account, which are less relevant for today's talk, but which are very important to deliver on an everyday basis. We have, therefore, to operate a context where we have settlement members, where we have nostros, which are managing the accounts of the banks in another currency, which is very important partners for us, and which are the key of success somehow in the smooth functioning of the system. While they are not somehow directly members of us, they are the customers of our settlement members for other currency. We still have to make sure that the processing of their payments is seamless and allows to have a very efficient settlement process. We are also relying on the capacity to generate liquidity in case of stress in the market, and therefore have a liquidity facility in place to allow a smooth settlement process as much as possible. And again, we are interconnecting to our system a very large panel of third parties, which are the customer of our customers, but which are the one from which I would say the trades are originating from. A lot of fund industry obviously is behind this. Other banks, corporate, as I was mentioning, are very important as much as we are delivering there. Next slide, please. In this context, the ecosystem in which we operate is focused basically on resolving the equation that you have on this slide. I like very much this one because it really shows the challenge that we are facing and how we are trying to answer it. Settling an FX trade, settling a PVP in a certain way means what? In fact, CLS is addressing three, I would say, main settlement risk drivers which are in the market. The first one in the middle, in fact, is a principal risk. That the risk that basically you cannot make the trade in the end, and you are exposed because of the time difference. In the case of a bankruptcy of an actor, the so-called Erstatt bank risk, that one leg has been settled and it cannot be returned, while the other leg has not been settled, and therefore you are really exposed to principal risk. This is a very big operational risk, obviously, for the actors today in the market because of the time zone difference, because also of the fact that the sequence in which each market is operating is of a different nature, often batch driven, and therefore if you miss a batch, you have to wait next day, and in between can happen a lot. So that's really a very important element to consider. The fact that if you don't use oops, it's going all over. If you don't use somehow a system which interconnect with central bank system like RTGS, then you are exposed to commercial bank risk. So you have to settle in commercial banks with a risk related to this versus central bank money usage. And one which is very big for the banks, probably less today in the constraints of the market, but which is very dear to the bank when you see the volume we are speaking about, is liquidity constraints. When you have to process the settlement of such big volume as the one we are settling every day, the capacity to get on the account of the banks at the right moment, the right liquidity is a big challenge. And therefore, the plus of a system like CLS is that through a mechanism of multilateral netting, we can answer those constraints by minimizing the necessity in terms of liquidity to the really minimum. So through the different mechanisms we have put in place together with the multilateral netting, as well as with a specific swap mechanism which allows banks to exchange long and short position in different currencies, we are able to reduce every day the liquidity needs to below 1% or more or less, which means to settle more than 6 trillion, you need a bit less than 60 billion of liquidity. This is really a huge benefit for the system in terms of liquidity processing and in capacity to process settlement in this regard. We obviously provide the security of payment versus payment, which with settlement finality makes that it is safe. When it is settled, you are sure that either it is completely settled or not settled. Be careful, CLS is not a central counterparty. We do not guarantee settlement. So if money is not there, we don't settle. So there is no exposure to principal risk. But through the mechanism we have in place, this has never happened, fortunately. But at least when it is settled, you are sure that you have the other leg of your transaction. And we settle in central bank money. So exclusively in the 18 currency we are directly connected to the different RTGSs of the 18 currency we are settling. This is the strongest asset, obviously, that we can give. And in terms of finality, the strongest that you can get. And therefore are reinforcing to the maximum the context in which we are operating for the settlement member. If there is one thing to remember about CLS, is really this equation that you see here. We are taking away this risk by providing different facilities and within a very stable technological environment. And if I go to the next slide, it's telling you the story of more or less CLS, how we went from starting in 2002 with 7 currencies and 39 settlement members to today, where we have 74 settlement members and 18 currencies and more to come. There have been different milestones that we went through to get there. It has been a journey to understand how we can reinforce the different functions and reinforce the way the ecosystem is. Again, being driven by this purpose of us, which is really to bring stability and resilience to the FX ecosystem, and focusing on this particular point. We have also contributed as much as we can into the evolution of our ecosystem, contributing in particular to a big milestone, I think in 2017, the drafting and somehow the production of the FX Global Code. We participated to this, which Global Code was done by the Global FX Committee. And we signed it, and we encourage all ecosystem, I would say, members or active participants to sign also this Global Code. This Global Code is really giving basic principles, but very important principle on the way to settle and to be active as well in this context. So we are working closely on that. This Global Code has just been revised, by the way. You may be aware recently in July, in fact, this year, published a new version, which I would like to highlight 2 principles of the principle in this one, so-called principles 35 and 50, which are focusing on reinforcing, in fact, the risk related to settlement of FX transactions, and which have been reinforced in their language, asking to, as much as possible, find mitigants to minimize exposure, and in particular to develop and use whenever available PVP mechanisms. Very important point to look at this necessity to bring PVP mechanism. From this work we did with the ecosystem and to which we contributed as much, we have also derived that in complement to settlement, we could provide other services, and in particular, have introduced a new platform, a new service called CLS Net, with providing the capacity to net trades in other currencies than the one we settle. This has given the possibility to participants to get an agreed, I would say, awareness of their bilateral position in about 120 currencies, where they can do trades of FX nature and where they can therefore, through this central mechanism, calculate bilateral position they have to settle across. We do not settle those transactions. They are not in the 18 currencies, but still we provide the possibility to match at settlement level and to calculate net positions that they should after tackle within their system. So strong, I would say, development of our, I would say, product context. Similarly, we brought there the capacity to have now settlement, as we call it, CLS now, which is a capacity for the banks, if they choose so, to settle instantly when they are ready, a trade bilaterally, a currency against another currency, This functionality has been introduced in 2019, so it's quite recent. Specifically, looking at the pandemic context is very new, in fact, because to connect to this service is a complex, I would say, challenge, but allows already somehow to interconnect two RTGS to process a PVP mechanism, a leg being settled in dollar and another leg being settled, for instance, in euro or Canadian dollar. So the capacity is there, and the capacity to deliver that has been available for the market since 2019. We do not see yet so much connection to this service, but we do have the functionality operational and are looking to see how we can answer the market needs for that. And we are looking at that currently. In fact, if I move to the next slide, we are trying, in fact, to further develop what CLS is for, as we see the ecosystem evolving towards new challenges, and are thinking, in fact, in light of this context, to reinforce our services. In this context, we are looking at the possibility to reinforce the way we are bringing capacities for the future to the ecosystem. We saw in particular in a report which was published by the BIS in 2019, at the end of 2019, that the evolution of our FX ecosystem is that more and more new currencies are coming in the system, and therefore that we have to answer as much the capacity to settle in those currencies. It is complex to bring new currencies into our system. They have to meet fully the PFMI context locally, and to adjust to the international timing and I would say synchronization that we need across the system. We are embarking into having, for the first time, a South American currency to join the platform. So the Chilean pesos will join, hopefully, in 2023. It is a journey to bring a new currency. This has required adaptation of their local regulation, again, showing the importance of the interaction between the public and the private sector, as much as it requires the private banks there to consider to connect to our platform to be able to process against international banks, in particular, the settlement of their currencies. And therefore, we are progressing also on this front. Maybe one thing before speaking of the future development in this regard, or what we are looking for developing new services, it has been an interesting journey to look through the pandemic. The pandemic has teaches us quite a few lessons. First, the resilience of our system has allowed to process very high volume of settlements, in particular at the beginning of the pandemic crisis. We had on average more than 7 trillion USD equivalent per day, but with peaks over 13 trillion. So really very big settlement days that we processed very smoothly, again, with a very efficient liquidity somehow saving mechanism, which allowed to process it quite strongly. And we see also that more globally in the margin of all these developments, the ecosystem gets wider, more currency are coming in, and therefore we are now looking at the possibility to further our system with different capacities, and looking in particular to introduce new currencies and capacity to settle more broadly. For that purpose, as it is difficult to find now, I would say, countries which would align completely to the PFMI and quickly could join the core settlement mechanism we have, which require a very high level of standardization, we are looking at an alternative PVP mechanism. And for this alternative PVP mechanism, we would need, again, the collaboration between public and private sector, which we are doing. And we are engaged, therefore, with the central bank community to understand what are the challenges and how we can answer them, as well as with the settlement member and ecosystem. We created a working group with the top 12 settlement members that we have in those markets, and looking at what type of solution we can bring in there to reduce settlement risk in a space where it has grown substantially. We see that following the assessment of the BIS survey, triannual survey on the FX space, that now the level of settlement risk, which is with those currencies, is similar to the level which was there when we started CLS on those currencies we are settling today. And therefore is not really acceptable to keep there. So we really need to move in this space. And we really appreciate in this context the work which is being done by the CPMI and the FSB on the roadmap for payments, because it reinforces the focus on the necessity, in particular in the building block 9, focusing on the payment versus payment mechanism, that we need to do something as an ecosystem, and we need to bring a strong, I would say, a push to increase the coverage despite the constraints due to local focus of those different currencies, and to the fact, to be very clear also, that those currencies are particularly challenging in terms of geopolitical context. So
Mark,
the point
sorry,
is...
may I interrupt you? Just a second, just a question. Sorry, concerning this issue of settlement and liquidity risks, my understanding is that with these services that CLS are providing to the banks, you mentioned CLS Net, CLS Now, new services that have been added in the last years. In a way, absent in area verbis, but CLS could be a sort of catalyst of settlement risk from the bank side, especially if the different banks lines internally are not coordinated. So if they are not speaking each other, one could resort to the CLS Now service, the other one could go somewhere else, thinking to netting payments. And so my idea is that you are directly, maybe, or indirectly, I don't know, offering the banks the possibility to monitor intradaily their liquidity position, because it would be quite crucial in a cross-border environment, more complex, with many services added by the same operator, which is CLS in this case. Is that the case? I mean, have you got experiences of this kind, of possible problems that have been solved on the bank side in settlement and liquidity management?
So we are working on that. That's what we are trying to define exactly, Claudio, in fact. So that's exactly the scenario we are analyzing currently. We conducted a pilot over the last months and came down to different models to eventually resolve this equation. What is interesting is that it's a world where netting is very important. There is so big volumes, even in those, I would say, other markets, that you need to find a way to minimize liquidity impact. The challenge being that you need to access liquidity, probably in a market which is not your domestic market, because you trade against another currency. And therefore, where you rely on nostros, so on third parties in a certain way, on banks you use over there to be able to manage your liquidity in that currency at that particular point in time. And so we are trying to find models which are optimizing this circle. It's a quite complex mechanism. We are getting there. We have one of our models which provide for a multilateral netting capacity to deliver on this. And we will be rolling out more information on that in the coming months as we are progressing on this pilot and probably focus on that to deliver. But exactly the point you made is very right, Claudio, is being able to deliver a model which strongly addresses this challenge is at the heart of what we want to do to help the banks to meet exactly their, I would say, daily challenges that they have across the different currencies on which they are playing in the FX context and market.
Yeah, also because
so, absolutely.
I guess your dialogue is with settlement members, but in turn, yep, a settlement member has a plethora, maybe, of indirect participants to the system, yep, and which are smaller banks, medium-sized banks, and so their liquidity needs, their settlement members' liquidity needs and demands are also conditioned by other customers. Yeah. Okay.
Yeah, that's why we are trying to engage broader with all the community, the 28,000 that I was referring to, but the primary focus is on the settlement member who have the knowledge on this and can help us to identify those challenges if you want. If you give me 1 minute, I had one more slide to cover, just to cover sure, what we are doing to maintain our, I would say, resilience and further reduce the systemic risk beyond this point. So we have 3 focus on which we are relying as an FMI, which are very important. So the development we mentioned on the ecosystem is one. If you go 2 slides forward, which is 3 pillars, I would say, of our policy internally and on what we want to invest. Resilience is at the heart of everything, obviously. So we are looking at our operational effectiveness and cyber posture on a permanent basis. It's a very strong aspect. Like all FMI, we are trying to meet the highest standard of security on that and the highest standard of resilience. A lot of focus has been put on that, and I remember with the work we did also in the ECB before my time, and probably Fiona is well aware of those challenges as she goes forward afterwards, is very much at the heart of what we have to do, and therefore a lot of focus on that. Besides this, we have a very strong risk culture to implement, and we do invest a lot on our three line of defense model, so that is very strong. We are releasing out a brand new enterprise risk management framework, which is now in place and being installed with risk appetite and measurement on how we can really make the best use of all the investments we have made in our second line of defense, as much as our three line of defense are well articulated together. Big challenge. Last focus, not the least, is technology. We are in a world where we rely heavily on technology, and therefore you need non-stop to be able to make sure that you have state-of-the-art, resilient, stable technology. It is the case. We just roll out a complete new, I would say, software context in which we operate our core settlement, which is based on a modern and scalable technology, which we have released so last June. And we are continuing to look at different technologies and trying to unify this as much as we invest in our hardware technology as much, and very much focus on that. I am conscious I am at the end of my time, so I don't want to speak much more. Again, thank you very much for the opportunity to be there. Hope to see you soon in Rio, and happy to answer questions if you have any, or wait the panel.
I don't see any question on the in the Q&A box, if I'm not wrong. Let's have a look.
There is one asking technology.
Yeah, exactly.
Yeah, so what we did is we use now a standard technology for the software based on the modern languages, which was revised from languages which were used and which were proprietary to IBM, our provider, in fact, 20 years ago. So we have completely now out of this language and standard language. And as much we are moving to dedicated data centers, which will be of a higher level of resilience in the coming months, and to be reinforcing this element. So investments has been done in this context to have, again, scalable and easy to adapt technology based on very, I would say, a state-of-the-art type of software and hardware context.
Okay. No other issue. Okay, in this case, thank you very much, Mark. Quite informative and useful. Now I have the pleasure to let the floor to Fiona von Eckelpohl for the general discussion part of our session. Fiona is the Deputy Director General of the Market Infrastructure and Payments Directorate, which we just mentioned a few minutes ago when introducing Mark. Fiona has a long experience at the ECB, where Fiona we've been meeting in many places for a long time, I should say. And she's an expert of payment system functioning, but she has a deep knowledge also of other FMIs, CCPs, and security settlement systems like Target2 Securities, for instance. But for the sake of time, I stop here and let the floor to you, Fiona. Thanks.
Thank you very much, Claudio, for the very kind and warm welcome, and lovely to see Mark in the session before, and João from the Central Bank of Brazil prior to that. So I think it's a very interesting topic that we have here today on the cooperation of the public and the private sector in the area of cross-border payments. And now I have a few slides. This is always, of course, the moment of truth, whether they will share as they should. One moment, please.
Yeah.
We still see your, okay. should you try and go full screen?
Yeah.
And then we see
Some
gray
boxes.
box. Yes, you should move to the other screen before.
Yeah.
Okay, now you should invert the screens and display settings. If you choose display settings,
I don't see such an option.
on the top, you see show taskbar and then display settings.
Yeah.
Okay, display settings. Open that window, please. Okay, swap presenter view.
Okay.
Not yet. Okay, perfect. Now it's perfect.
Okay,
Thank you.
Thank you very much. I think it would be easier to set up a fast payment system than to show a slide on some days. Okay, so the intention is to reflect a little bit on the public and private interaction that's needed in the area of cross-border payments, and indeed coming after Mark and his presentation on CLS, which indeed is a wonderful example of a system that was asked for by the public sector but delivered by the private sector, and I think that gives us a good example of what can be done when public and private bodies work together in a sound way. So what I would like to touch on shortly this afternoon is maybe a few words on the cross-border payments global initiatives, just to set the scene, then go on to look more specifically at what we're doing on the side of the ECB and the Eurosystem in the fast payments and in the cross-border space, and follow this up with a more deep look at what we are doing with a specific example on TIPS. So cross-border payments global initiatives. So the work of the G20 in the area of cross-border payments has been very instrumental in galvanizing the public and the private sectors into action, both separately and together. The G20 roadmap set out to address the key challenges that are faced in this area, and the progress report published by the FSB in October this year went a step further in terms of setting out specific quantitative targets at the global level to address the 4 key challenges of cost, speed, transparency, and access faced by cross-border payments. Now, the end of 2027 has been set as the common target date for these 4 areas, with the exception of the remittance cost target, where a date of 2030 had previously been set, and this was endorsed by the G20, of course, at that time. Now, when it comes to measuring progress in these meeting these targets, this will be crucial in order to determine whether the roadmap actions are sufficient or whether additional actions will actually be needed. The FSB also has flagged the importance of private and public sector involvement and action in order to achieve these targets. For the sake of completeness, I have also noted on this slide the work of the BIS Innovation Hub, in particular the Nexus project, which is a blueprint for instant cross-border payments. However, there was the nice presentation by Andrew McCormick earlier today, so I don't think more needs to be said on that particular one. When it comes to taking the G20 roadmap forward, the Committee on Payments and Market Infrastructures, the CPMI, is playing a key role in leading the implementation of 11 out of the 19 building blocks identified in the roadmap, and 2 of these in cooperation with the BIS Innovation Hub and the FSB. And again, we come back here to the strong interdependencies between the different elements of the programme, again underscoring the importance of working closely together with public authorities and with the private sector. So looking a little bit closer at what exactly the ECB is doing in the area of fast payments. So the Eurosystem has set out a comprehensive strategy based on what we would call complementary elements. So first is the provision of cash, and this was also mentioned by my colleague from the Central Bank of Brazil in his presentation that kicked off this session this afternoon. This, of course, is a core aspect for any central bank, and despite what we do in the areas of electronic payments and despite what may happen in the future, cash remains a service that we as a central bank would like to continue to provide. There is also the promotion of pan-European payment solutions under the Eurosystem retail payment strategy, as well as the fast deployment of instant payments in the entire euro area. And of course, the preparation of the possible issuance of a central bank digital currency, the digital euro, which we have announced in July this year that we would embark on. So Given the focus of today's webinar, I'd like to concentrate on the retail payment strategy of the Eurosystem, which has a particular focus in the area of fast payments and also on cross-border. So the Eurosystem relaunched its retail payment strategy in November 2019 and complemented it further this year. And the backdrop for this was very much along the lines of what was mentioned by the colleague this morning from Banca Intesa when he referred to the changing ecosystem in the payment space. We have new entrants, we have digitalization and technological advancement, and many more developments that we have to take into account. So this prompted us on the side of the Eurosystem to redefine our retail payment strategy. First, establishing a pan-European solution for what we call the point of interaction payments, essentially the payments that take place at checkout stores and also at e-commerce, and where we have set 5 key objectives that should be reached in terms of pan-European reach and customer experience, convenience and low cost, safety and efficiency, safety being a topic that Mark just alluded to, and the resilience when it comes to this is absolutely paramount. A European brand and European governance, and ultimately for the longer term, global acceptance. Second, what we aim to have through this retail payment strategy is full deployment of instant payments, recognizing that instant payments should become the new norm in a digitalized society. And when it comes to instant payments, the objectives of the Eurosystem are as following. We want to have availability to all individuals and businesses across Europe. We want to have attractive conditions for end users. We want the availability of additional pan-European functionalities that support the provision of end user solutions, for example, request to pay. And we want to overcome barriers to the use of instant payments, which we observed today, for example, rejections, which can happen due to problems with control checks and so forth. Third, we want to support fintech and innovation, more specifically to help facilitate the access of non-bank payment systems or payment service providers to payment systems, and also initiatives related to electronic signatures and electronic identity. And fourth, of course, is the improvement of cross-border payments by contributing to the work of the G20, but not only. We also want to look at initiatives within Europe, so between the euro area and other jurisdictions closer to us here. So as just mentioned, the ECB and many central banks of the Eurosystem, like other central banks, of course, across the globe, are actively contributing to the CPMI deliverables for the G20 roadmap. And in addition, the Eurosystem is looking at the possibility of linkages with other RTGS systems or instant payment systems of major currencies in order to facilitate cross-border payments at the global level. And going back to points mentioned earlier today about the importance of interoperability and interlinking of systems, and I think it was Andrew who mentioned that this was absolutely the way forward when it comes to this space. And finally, the Eurosystem is investigating with other central banks of the European Union and of the European Economic Area on the possibility for them to join TIPS, our Target Instant Payment Settlement Service. And in this regard, we're looking explicitly at how to support cross-currency payments between Euro and other EU or EEA currencies. And this brings me to what specifically we are doing in this area. Now, earlier this morning, you heard about the initiative between TIPS and BUNA, the proof of concept work that's going on there. Here, I would like to focus on another initiative that has been mentioned, but I will go in a little bit further on it. This is between the ECB and the Central Bank of Sweden, the Sveriges Riksbank, where we have decided to investigate how TIPS can support cross-currency payments between Euro and the Swedish currency. And this is a work stream that's also very valid in the context of the G20 work. So in October last year, the ECB and the Sveriges Riksbank undertook to investigate whether and how TIPS could support cross-border payment transactions between Euro and the Swedish krona. And with this investigation, the two central banks will explore possible ways of enabling the TIPS platform to process such cross-currency instant payments, looking in the first instance at the operational model and at the legal setup. Now, assuming that the explorations prove positive and that all the parties agree to go forward, in practical terms, the service would enable a Swedish consumer, for example, to transfer funds in krona to a retailer in the euro area, with the payment received in euro in a matter of seconds. And likewise, a customer in the euro area could transfer euro in payments for goods in Sweden. So this morning we heard of different examples on the remittances front, but here it's a bit more focused on retail payments with a particular good or service in mind. But of course, it can be broader than that. Other countries too, with other currencies that join the TIPS platform in time, could also benefit from cross-currency instant payments in future. And as mentioned on the slide, the fact that the Danish and the Norwegian central banks have meanwhile expressed their readiness to engage in formal discussions with the Eurosystem for possibly joining TIPS, we could see more developments on this front going forward. For the purposes of the cross-border service and TIPS, 3 work streams have been set up to provide the business solution, and these work streams cover policy, technical, and regulatory aspects. So on the policy side, the focus is on analysing the business cases for the payments industry, as well as looking at linkages with the G20 cross-border payments work. On the technical side, settlement models are being examined together with the use of ISO 20022 messaging, which was also mentioned earlier as the standard to be followed here. And we're also looking at potential risks and, of course, security measures as IT security continues and operational risk continue to be issues that require a lot of attention going forward. And finally, on the regulatory side, there is need for a legal assessment as well as looking into governance aspect. Again, assuming a positive outcome to the analysis that's being conducted, we could see an increase in the functional scope of TIPS so as to cover cross-border payments, which in itself could be a catalyst to make TIPS more attractive to other markets as a cross-border payment solution. So in this slide, we just look shortly at the life cycle of a cross-currency payment, assuming, let's say, that this would be on the TIPS platform and taking it from the step of currency trading to settlement. So as I mentioned before, if the analysis would prove to be positive, and if indeed we would go forward with technical and functional enhancements to the TIPS service, these could be categorized according to 3 different layers that we see here in this diagram. So for the currency trading layer, which is the one on the top, this addresses how the exchange rate is defined prior to introducing it into the TIPS platform. For example, by using a central hub for exchange rates that can be accessed by the payment service providers in order to select the preferred foreign exchange rate that they would like to have applied to a particular transaction. Then in the second layer, we have the currency conversion layer that brings the currency conversion into TIPS. And third, we have the settlement layer, which relates to the actual movement of funds. Now, there's a lot to be said, of course, on this, but as the analysis is going on at the moment, I will not go into further details on this occasion. But I just put this out there as an example of initiative that's going on between central banks and directly linked to the work of the G20, as well as initiatives that we are having ongoing on the European front. But of course, we also have other initiatives directly in relation to instant payments in Europe, where we are working more closely with the private sector to have a greater take-up of instant payments across the European area. And with that, I will conclude my presentation, but of course, happy to hear more from the colleagues here today and answer any questions you might have. Thank you.
Thanks, Fiona. Many thanks. Again, quite informative on the broad spectrum that you are carried out at the ECB level. I don't see any intervention in the Q&A box, and so if this is the case, we can move to the panel, to the next panel. So thank again to Fiona. Now we have a panel discussion dedicated to how to set up effective and efficient interlinking networks, this is a good opportunity to have different viewpoints, considering the roles and the different experience of our speakers, who represent different business, technical, and geographical perspective and needs. We have 3 distinguished experts dealing with the issue. We have Susan Hui, who is a member of the United Overseas Bank Management Executive Committee. She is also the head of the technology and operation at the group level. And Susan was responsible for various different lines and projects in this field. Among other things, she chaired initiatives and steering committees in Singapore that contributed to set up innovative payment services like PayNow that was also mentioned this morning. Then we have Irving Kulk, the head of service development and management at IBA Clearing. IBA Clearing is the leading private provider of pan-European infrastructure solution for European payments in Europe. Erwin has a deep experience in the management of many systems that myself, or my personal experience here at the Bank of Italy, know a bit, like Euro 1, Step 2, RT1 for instant payments, and more recently the joint IXB initiative with SWIFT and the US clearinghouse. And I don't know so much about the IXB, but if I'm not wrong, it's an example of interlinking of instant payments. So it would be quite interesting to listen about that. Last but not least, we have Harry Newman from SWIFT. Harry is responsible for SWIFT banking strategy and has a long experience in the field of financial markets and their infrastructure at the global level, by definition belonging to SWIFT, including the setup of systems, again, like Target 2 Securities, Euro 1 in Europe, the instant payment system in Australia, and more recently, he was also following the SWIFT GPI initiative. So thank you all for your participation. I will start, for the sake of time, a first round of discussion with you, Susan. From a banking perspective, that's my point. You are facing an increasing customer demand in the next future, I guess, for more efficient and timely cross-border services, but also, I would say, for more complex services, complex under a legal, technical, and business points of view. We, as central banks and regulators, tend to think of cooperative approaches among banks, technical service provider, clearing houses, infrastructure network services providers, and so on. That could be the case, indeed. But at the same time, we know that the banks are themselves becoming somehow a platform. We could speak, and we already do that, not only Europe, as platform as a bank or bank as a platform. So do you see there is a trade-off between this issue of competition against cooperation in the market in the next future? And what's your view about this relation? Let's start with you, Susan. Thanks.
Yes. Can you hear me?
Yeah, perfectly.
Okay.
We don't see you, but now we can see you. Yeah.
Okay. All right. Very good. I think I'm in Singapore and within Southeast Asia and then within the Asian context, right? And each of the country is its own jurisdiction with its own currency, its own language, culture, and so on. So when we talk cross-border, there are many things we need to transcend. We don't have a singular monetary policy. We don't have singular currency. and so on. So the complexity of cross-border payments in Asia is real, all right? And I can share the example that I'm sure this was discussed earlier when we then joined the two instant payment rails between Singapore's domestic instant payments and the Thailand's instant payments. Yeah. The issue of AML asymmetry when the AML checks and all that were to take place, settlement, as you have mentioned earlier on, and also dispute resolution and some of the issues, because we are today during COVID, a lot more instant payments, but guess what? You also have a lot of, fraud, scams, and errors that goes on. How do you retrieve and make sense of the whole thing? And as trusted institutions regulated in there, this is very, very important for all of us to make sure that we become the system that is the most trusted. There are lots of fintechs that are out there that we also partner, we also compete, right? And many of these themselves are platform players. So like in this part of the world, within Southeast Asia, you have fintechs like Grab, who started with cars, delivery and all that. They have wallets, and then they have ambitions to become specs. And even with wallets, what with the central bank has done is to facilitate their entry into the fast payment network, which is the instant payment rails, and they avail themselves to the Pay Now service, which is account proxies. And that facilitated the whole innovation of services online. So they are both competitors, but also very useful in the whole ecosystem. How we find that real balance is important. But I think from a regulatory standpoint, I think we took lessons of how Europe has done some of the instant payments and all that. And for these non-bank players to come in is to facilitate entry so that, you have less hops. But the essence of, I think, the money supply, the escrow over the accounts and all that to make sure it's properly funded and all that, all those rules has been set in. So I think those are the important ingredients. You can say complexity, but it's really needed for the trusted service to take place, and it scales very, very quickly. But it's challenging in this part of the world, trying to link the different cross-border systems together cross-border, because the standards have not been quite discussed, right? The global standards has not been formed yet. Unlike in our previous era when we're dealing with corporate payments, we have the organization of SWIFT globally to do that. So for us to put that global framework, or at least a few parties coming together now to try to discuss this framework, I think will pave the foundation for the future. Yeah. But there are lessons of what will work in Asia, what will work in Europe, and how do we find that common ground?
Okay, yeah, that concerning non-bank participants, there is, on one side there is a strong market pressure. On the other side of the coin, there can be some legal and regulatory issues, looking at the financial stability and market integrity needs from a central bank perspective and for a regulator. So it's not so straightforward. It's important to look at that, but it cannot solve immediately, let's say.
Correct. So there are different layers. So one is regulatory on that front. There's also a regulatory that is very strong amongst all of us. At the end of the day, the payments infrastructure depends really on technology infrastructure. And then the need to ensure that the level of resiliency, security, and all that is similar as you link together. Because once you link together, then we are going to be as strong as the weakest link.
Thanks, Susan. Edwin, coming to you, a similar question in a way, the same question. Your viewpoint from the position of a primary ACH and service provider, and what's your perception of the next market developments in these fields?
Yeah, thank you, Claudio, and thank you for having us on this panel. Let me get to your question, but maybe first spend a few words on what we're doing today for those who are not familiar with our company. So in brief, we were founded in 1998 and we're owned by the leading banks in Europe. And since 1998, we've been operating European cross-border but single currency infrastructure. So we started with Euro 1, our high-value, highly liquidity efficient payment system, which is operating alongside Target 2. Euro 1 processes around 200,000 transactions a day with a total average of 200 billion. And a substantial part of those transactions are in fact one leg out transactions already. We also operate Step 2, which is our SEPA retail payment system, which has full reach in Europe, on which we process 50 to 60 million transactions per day on average, with peaks up to 150 million on a single day. And since 2017, we also operate RT1, which is our pan-European instant payment system in SEPA. And we are also in the process of launching a pan-European request-to-pay solution. So that's the context, the building blocks that we have already. Now, I think for this session, it would be interesting to give a brief overview of what we've been doing together with SWIFT and the clearinghouse and a number of banks and the initiative that we have and we refer to as IXP, Immediate Cross-Border Payments. So we are in regular exchange with the clearinghouse and obviously also SWIFT is also one of our key providers. But the clearinghouse in this context, to highlight, they have a very similar setup of what EBA Clearing has in Europe, and there is an overlap in ownership as well. So we've been talking about linking our payment systems in the past, but this was never really actionized. But in recent years, and especially recent months, we see from our users that a momentum is building up these days. And there's on one side an urge from the authorities to remove frictions for cross-border payments, but I believe the real driver is coming from the banks. They do not only see the threat of competition, but also opportunities that could come from linking payment systems. So therefore, last year, together with Bank of America, BBVA, Citi, Crédit Agricole, Deutsche, HSBC, ING, Intesa, JP Morgan, PNC, and Société Générale, we started to develop the IXP blueprint, and we delivered that during this summer. And then a number of those banks said, okay, let's do also a proof of concept and continue to work on this IXB concept. So the core of IXB is to leverage as much as possible existing building blocks. So similar to other initiatives that we heard about today, using existing payment systems and don't try to create a cross-currency legal payment, new legal payment system that will create much more complexity. And so using existing building blocks has always been our foundation of this initiative, and we want to use the legal basis of these systems to ensure finality of the payment. Now, many of the other building blocks required for IXB have already been launched in recent years or are about to be rolled out by SWIFT, for example, such as GPI, pre-validation, SWIFT Go. And that's also one of the reasons why SWIFT has joined this initiative. Another element that SWIFT could add is to replicate this concept to other corridors, but I'll let Harry elaborate on that later on. So the IXB concept is using the settlement between the systems, and I believe when you combine it also with a global request-to-pay exchange, we would enable a very powerful global payments ecosystem that has a relative short time to market. So IXB could be implemented both in instant payments and in high-value payment systems, and we're looking both at, on our side, at RT1 and Euro 1. In the last couple of years, we've seen various initiatives connecting payment systems for cross-border payments, but always in these initiatives, we see that there is a type of serial settlement. So first the payment is settled in one system and then in another system. So what we thought through with the banks is that this comes at a certain risk, especially when you want to scale it, because if there's anywhere a hiccup, you have to undo the transaction, and there's a lot of additional exception handling, and for specific use cases, you would like to have more certainty in the execution of the payment. So I think in what IXB is unique is that we make the settlement in the two systems synchronized. Basically, if you settle in one system, it is made conditional to that the payment can also settle in the next system. And if a transaction can't settle in either system, it will not settle. So we believe that this will be an important element to allow cross-border payments to scale, especially with new use cases, for example, in B2B transactions, e-commerce transactions. This settlement synchronization can be very powerful. And 2 months ago, we did a proof of concept together with a number of banks and Swift and TC8 and ourselves to use that settlement synchronization with our instant payment systems. We were exchanging messages in less than 10 seconds, and it was in a test environment setup. So you could imagine once you optimize it for production, that could be much faster. So we start with US Euro corridor. That's maybe the last comments on this point. Why that corridor? Well, that really represents the majority of the cross-border transactions, and so an important element also in light of the FSB objectives to target the processing of 75% of credit transfers within 1 hour by 2027. But definitely a concept that can be replicated to other corridors as well.
Are you telling us that, if my understanding is correct, that IXB could represent a sort of model for this sort of interlinking connection, as for the format aspects, for the format, for the IT profiles, I mean, for what we call the semantic interoperability, for instance, technological and semantic, is that the case? I don't know the IXB, so I'm just listening now about its features.
Yeah, I think Harry will later on also elaborate on what Swift has been doing in that space as well. But definitely agreements on which standards to use are part of what you need to agree as well.
Yeah, I mean, but I didn't intend to overlap too much your presentation with Harry's. Anyway, yeah, thanks. Harry's, I mean, coming to you, your experience, again, I have in mind this issue of the relationships in the market structure among banks, TSPs, network providers, ACH, and so on, because it's crucial for the next equilibrium in a way, if any. What's your experience of these proofs of concepts, and were they frictionless? There is some strategic issues that could be added, or are you optimistic in general, or optimist or not? I mean, your practical experience in this field is quite valuable.
Well, I'm always optimistic. I wouldn't be still doing this stuff if I weren't optimistic, because there's always solutions to these things. Although sometimes the issues aren't necessarily what people think they are, and actually one needs to get into them and work out what the issues are. So I'm going to try and answer your point, Claudio, and like others, I'll just explain where we're coming from and how we link up with local MIs, because there is a tendency, and I think others have kind of covered this, there's a tendency to think of international payments and domestic payments as totally different. But the reality is not that. Something like 40% of international payments will end up in a local market infrastructure to reach the end point. The two are deeply connected. And that's already true today. And as we go forward and we start doing more interlinking, it's going to become more true. So the degree of interdependency and the degree of standardization between MIs will have to logically go up significantly. Erwin's already highlighted it, and I think Susan as well. That's never mind the specific system, that's going to be a global importance. But perhaps I can just go back a couple of steps. I mean, we launched GPI, which has been referred to, well, 4 years ago now. Almost all payments on SWIFT are now made across GPI. And we know that most payments are actually credited to the receiver within minutes or perhaps an hour, and very few take longer than a day on a global scale. And that's quite important, because that sort of bedrock is possibly not what people expect. It's not instant, but it's a long way further down the road than people maybe thought. We recently launched a Swift Go proposition, which uses the same rails, but by having faster service levels voluntarily agreed to by the players, drives that further still and gives upfront predictability. So all the players involved agree to very short chains, and they will agree to give their clients, partly because it's short chains, upfront predictability on fees and foreign exchange, and there's a very short time frame, and payments will, in that case, typically take seconds or possibly minutes. Now, what we're now building on that, and starts to provide some of the building blocks that I was talking about, is we're building on GPI to an instant frictionless strategy, where we actually say, right, let's go end to end, where we pre-validate instructions and we allow rich data based on ISO 20022 to flow along the chain, so that all players in the chain can have the data they need where and when they need it. And a really key part of that is integrating with local market infrastructures, both generically, and now the opportunity is coming in cases like IXB to do that in more specifically and in a tighter and better orchestration. So the building blocks we're building into our new approach with our new platform enable that end-to-end integration, they enable that end-to-end data. And one statistic that highlights why this matters, if you look at the journey time to the beneficiary of a payment spends, on average, in excess of 80% of its time in the receiving country. That's really quite a start. Let me repeat that, 80%. And the reason for that is globally, things like currency controls, it's operating hours, it's the fact that the receiving country may not have the same standards and have the same data requirements. These things have to be managed and dealt with. Then there, of course, there's sanctions and AML and some batch processing. So all of those are factors.
We'll touch that issue, those issues in a moment. Yeah.
Yeah. So we'll come back to those. But those are the reasons. And building the reusable components and how we get that data end to end is absolutely essential, because otherwise it's going to be difficult. And we have established an instant plus set of standards, by the way, which is instant MI, international interoperability, so that instant payment MIs can have the right standards to link up end to end. And what we are, as I say, what we're now starting to do is working with initiatives like IXB, where we can reuse many of those components, add more, and get to a much tighter level of orchestration. So that passage is super smooth. So that's some of our experience. I think I'd say that traditionally domestic MIs, they haven't had a remit to look at international payments, to be international friendly. It's happened to a degree within Europe because, of course, of the euro, but in general, it's not been top of the list. And why should it be? An instant payment MI, and I've been on the other side of the fence, I've built one, it's got a lot to do locally. Whereas now what we're saying is, well, we need you to do international. And therefore we need this to get this international friendly structures built. And again, we'll come back to maybe that in a minute.
Yeah, thanks. Incidentally, before going to the second round, we have a question from the audience, which I saw only when Erwin was speaking. The question is it planned to include NFC compulsory in all mobile phones to do mobile payments to become operational in Europe? I have no news about that, but NFC compulsory in all mobile phones is not, I mean, I don't know the answer actually. NFC is near field communication. Edwin, do you have any insight about that?
Well, what we do with our infrastructures is we operate the underlying payment infrastructure, the clearing and the settlement mechanism. And with instant payments, it's instant settlement. We're now also looking into adding an additional layer to it, and we're rolling that out in Europe with the SEPA request to pay scheme. And that is very much also like the payment systems based on a four-corner model. I'm really a strong believer of that model. So without mandating specific technology, each of the parties that are using such information services can exchange information also before the payment is executed. But we would not as such operate or dominate the standards that are being used there. And there could be various solutions on this. So there could be solutions that are based on proxy services, on QR codes, on NFC technology. And so with the instant payment systems, the request to pay layer, you create a basis for payment solutions to be built on top of that. And that can be B2B solutions, that can be B2C solutions, that can use different technologies, but that is not in our domain as such.
Just to share in Asia to that question, similar to what Erwin is saying, like in Singapore, what we look at fast is the instant payment rate. So within 17 seconds, it is real time, is settled, is final. The legal framework allows that. Then we create as a utility for the whole industry and other participants to create innovations is pay now, QR standards, and so on. That allows that interoperability, then innovation sits on top of it, right? And the innovations could be banks and non-banks. And today in Asia, everyone has a mobile phone. So obviously that mobility and what you can do with it, with a QR code, with NFC and all that, innovations, subject to, of course, all the security standards that can then sit and ride out if they are participant of this faster or the pay now payment rails. You know, just to share a context in Asia. So very much along what Erwin is saying.
Our second round, I would propose starting with Harry this time, so the other way around, possibly the opposite perspective. I mean, what would be your request, your demands to the local authorities, to the standard setting bodies, or to central banks in order to make this issue of interlinks, but not only the interlinking, I would say, just the cross-border connection and functioning of payment systems, which is not only goes beyond interlinking, easier. I mean, what could facilitate what you as private players, banks or network providers are now making in terms of projects to satisfy your customer? I mean, my impression from my previous years here in this oversight area and specifically in the last months is that the legal questions, the legal problems are key. So legal asymmetries in terms of AML, know your customer, CFT are already mentioned this morning. Now Harry was recalling that much more these profiles than the technical one. I mean, it seems that the market will, however, find a solution for ISO standards or for technical and semantic connectivity, interlinking, and for technologies. And that the real problem is legal and governance also maybe, and I would say political issues concerning who's going to decide about interlinking. Is that correct? And possibly our first ideas about how to overcome this problem. Harry, please, I hand over to you.
Okay, that's a yes, it's a potentially large ask, so I'm at risk of talking forever on demands. But you know, an opportunity to demand things of central banks doesn't come along very often. So, no, more seriously, I think I mean, the most obvious is
maybe my perception is wrong. I mean, but I mean the legal points, the legal profile seems to be predominant in this discussion.
I think they're all there. Okay, I think they all have a role to play. So, for example, the most obvious point is the standards and getting the data through. And actually, maybe the technical solutions may not be the obvious one, as in it may not have to go hoppity hop along the route. There may be ways in which we can make the data available. And I say we here collectively, meaning the EBA or TCH ourselves, other ECB, other infrastructures. We may be able to make the data that's required available in other ways through API structures or whatever, rather than necessarily have every infrastructure have to do it immediately. But ultimately, clearly, you need to get the right data through, and international payments need more data. And your point about legal asymmetry potentially is handled by just having more data. I mean, we will run pre-validation on to say, have you got all the information you need to get through to the receiving country? Because the receiving country wants a different information from the sending jurisdiction. That's a legal asymmetry. And maybe there are business solutions today that handle that, and maybe there are better ones in the future.
Data are never enough.
Data never enough, because the receiving country wants something different by law. It needs a different identifier. It needs a different purpose code. It needs more information about the sender than the sending in country would normally send, for example. So the more we can do to standardize those things, the better. If not, there will be data and technical solutions, but they will be potentially, then not necessarily, they should be doable on main routes, but if we say less frequently used countries having very specific requirements, that's maybe not so straightforward. Banks deal with that all the time, exotics and so on. But when you come to standards, there are specific standards for international. So Instant Plus and HVP Plus. It's not enough to be ISO 20022. There are lots of different versions of that. And the ones that matter have been agreed by the communities to be there. That's a big ask. And then to have those longer operating hours, which most instant systems have. But if instant systems can allow international payments with the right standards and with the longer operating hours, that's a big set of wins. And then there are another set of asks around currency controls. Probably in our experience, the biggest cause of time spent is dealing with currency controls in the receiving country. It doesn't apply everywhere. But I don't mean here to argue that the world should do away with them. Those are economic things. But how do we get to a slick and standardized installation of those will be a very big help to payments into all the countries that use them, which of course is a lot of the emerging markets and more difficult routes. I have a longer list, by the way, but I think I've said enough at the moment. So.
Yeah, yeah, thanks. Erwin, your point of view on this. I mean, I know that we had intensive discussion with EBA clearing in the past concerning how to accommodate possible drawbacks and divergences.
Yes.
Yeah.
Indeed. Thank you for inviting to contribute to this discussion. So I think it is something that we need to jointly look into how we can remove and reduce frictions. And it's very important to the success of all these initiatives. But I would indeed like to start by recognizing what the Eurosystem has already done so far, and it's been very supportive in the rollout of instant payments on a cross-border euro level. Like, for example, the paper that the ECB published 2 months ago on its expectations on the rollout of instant payments, the expectation to roll out pan-European SEPA request-to-pay solution are very important for the prioritization of these type of initiatives. And also, in addition, Since 2017, the Eurosystem has made available ASI6 real-time in Target 2, in which we can manage our technical account backed by central bank funds. And that's also an important building block for the success of these initiatives. So starting from next month, in addition, our participants will also be able to fund and defund their positions 24/7. And that's again another improvement that is key to the success. And these arrangements of the technical account, the funding and the defunding that participants can do, they're available today for ST-INS transactions. But the ST-INS scheme doesn't allow one leg out transactions today. So our first ask, I believe, would be to make sure that the current arrangements also would support one leg out transactions, and that it will become available to both public sector and private sector operated CSMs. And then maybe back to the screening and AML, because I think that's also a relevant point where frictions are being recognized, and we can already see that at pan-European scale sometimes. So the issue is that in every jurisdiction, standards are different, and Harry was also referring to that earlier. I think a lot of value could be created by harmonizing these requirements and by creating the ability to do some of the screening at the center rather than at the level of each participant. And that would really reduce much of the cost and the concern that industry players currently have with regard to their transaction processing. But I do recognize that this is a big ask and that it might take some time. And maybe one step to get there could be the following. Solutions, they will most likely continue to use correspondent banking setups for exchanging payments between existing payment system, at least for the underlying settlement mechanism. So it would be a huge improvement if intermediary banks would not be obliged to screen the transactions when both the originating and the beneficiary bank using a domestic or regional payment system would also do the screening. Otherwise, you get 4 screenings in a row and possibly alongside different standards. So I think there's an opportunity for the regulators to look into how this could evolve. And then to further enhance, and I think that's also connecting to your previous point, where you say more data is needed. Yes, but with one but, because I believe in specific use cases in which the beneficiary went through a pre-screening, like for example a merchant, similar to the cards world. I think the screening requirements on banks should be reduced to be able to allow global instant payments to be at par with cards. So there could not be a one-size-fits-all. That will, I think ISO 20022 should not be penalized for carrying additional data. So maybe those are some initial thoughts on this point.
Yeah, thanks. And Susan, your experience from the UOB experience and business cases in Asia, and not only.
I think I echo what everybody has said. I think there is a lot we can do on AML. Different rules, different regulations, and the different sets, and many payments has been looked through many times. And right now, having the one-size-fits-all is actually very costly to us. And that cost is borne, right? And the cost that we bear, we could have moved it to do better things for more efficiency. Because if you think about our payments, probably I would say 80%, 90%, or I dare say 99% are used for legitimate reasons. The 5 to whatever percent that we got carried around in there, we could have done a better job. But how can we do a better job rather than use the same rules and then we apply to all right now? Because when we deal with instant payments, we are also dealing with retail payments, which are small value, high volume in tickets in nature, and you apply the same cost right through. So that economics versus what we are trying to achieve, where can we find the right balance, right? And I do subscribe. Is there a better way we can use data? Is there a better way we have a central ability, country by country, to look at a central place for sanctions or whatever it is and all that, so that we can carry it through that way? Maybe something that we can work with. I think that to me will be most useful, because applying the cost of AML to retail instant payments is really expensive. Yeah. In this part of the world, we also have currency control. So I'm not sure about in Europe, and definitely in Southeast Asia and in Asia, many countries have currency controls for both going in as well as coming out, right? But for retail payments, there are already, dollar amounts to allow movements and so on. So the space is very, very interesting. I'm really keen to understand what's happening in Europe and what else we can apply here, because that efficiency is definitely needed. Because at the end of the day, I'm again not sure in Europe, but in Asia, a lot of the retail payments, and why fintech is so popular, is because they can do it cheaper, faster, and easier on the mobile phone. And somebody gets hold of the money within the next 5-10 minutes, hour max, and the money arrives at the door. So how can the banks compete with that, so that we can keep stability, right? The majority should come back to the trusted utilities, where actually there are systems to protect liquidity, event settlements, and everything else. How can we, legitimize all these flows in a more efficient way?
Yeah. When it comes to the data issue, I have in mind that there could be, let's say, governance problems. I wouldn't say political problems, but for sure, the point is how to store that. So how to store all this data, and so what kind of repository and who is keeping the governance of that repository. We have these sort of problems in the wholesale world in any case. But it's important, and I agree. I mean, it's I wouldn't abuse of your patience. Just a quick third round from the regulator perspective could be very quickly about risks. I mean, from this discussion, my takeaway is that, of course, the market is evolving. There is, as we know, a pressure towards strong technological improvements, so high fixed costs. At the end of the day, I see, among others risks, very strong the risk of concentration, possibly. If there is a concentration risk, then we could see financial stability risks, but also and even more operational risks like cyber exacerbated. So is that correct? What's your view about that, Susan? Try to assume the regulator's perspective and not the business perspective in the next 4 or 5 years.
So I can only say I'm not an expert, but I'm only an observer, right?
Yeah.
So in this part of the world, in Southeast Asia, we don't have big concentration yet. I use the word yet, because the banks, with very, very proactive regulators who has been pushing for innovation and yet trying to make sure is regulated. Finally, it's a balance between pushing for innovation, supporting innovation, and protecting the systemic issues, right? So in this part of the world is well balanced for now. But if you take a look at up in North Asia, in China, for instance, the big technology platforms that has garnered and they've become banks, and there is a lot of money supply in there that's going, right, that transcends the traditional banks, and they become banks in itself. is very interesting, because then you have that concentration, but in different nexus, but it's concentration nonetheless, right? So how do you regulate that? How do you bring that? Because you have to take a look at the system as a whole. So I'm fairly heartened to hear everybody's looking at digital currencies, you know, what's happening on the crypto world and all that. So actually payments, I think at the end of the day, crypto is another way of moving money out of various systems and so on. How that all come together I think the regulator would need to play a very, very vital role in harnessing technology, which is, I think, very much needed for efficiency and everything else. But I think all the more the regulatory role becomes even more important.
Thank you. Erwin, please.
Yeah, I think there's a number of aspects to this. I think from a European perspective, and I think similar in the US and maybe another number of countries where there's enough critical mass, you probably don't want to put all your eggs in a single basket. So having, you don't need many payment systems, but having more than one is definitely of great value, also in terms of resilience and not having a single point of failure. So from that perspective, I think that could already answer part of the needs. But then I think in addition, we're also talking about making payments faster and faster and faster. And that is good and very useful for many use cases. But I think we should also ask ourselves the question if everything needs to become instant. Because that could potentially further increase the risk. And I think in many cases, as soon as possible could also be good enough. And I can understand very well that we start now with the instant payment systems because they already operate 24/7, and that's one of the major frictions, right? That you operate in two different time zones, and one of the payment systems that's doing the first or the last leg is limited opening hours, and with instant payments you would not have that particular issue. And on top of that, most that have been launched in recent years, they all operate already on 2022, ISO 2022. But I think when you start to further ramp up, I think it is dangerous to ask everything to become instant. And I can see also with high value payment systems everywhere around the world, opening hours are being further broadened. That will in Europe happen also with ISO migration, and it could be afterwards further stretched. And with that, you could have also process also as soon as possible, and also create time and space for both sides of the transaction to make sure that there are sufficient checks in place, because that will definitely be something that by fraudsters and by money mules, they would try to expose that particular aspect of the ecosystem, that funds can be moved very fast, and there's all kind of ways to mitigate that. But if we try to put all the payments through those pipes, then we might be fighting a difficult battle.
So again,
but Erwin, this is where, you know, there is concentration risk. I agree with you that you say, but actually, if you think on the fraud and the scam, the more of these networks that you have that's independently operated, the less you see. Actually, if it's all within the network, you can actually, if we do legitimate business and we cooperate, the data can actually, we can actually protect actually the real business a lot more. Yeah, but where's that balance, right? I just put a perspective on. I agree with you. The instant payments is not the issue itself, but because of the velocity in which the payments gets real, the money mules and the scams make use of it, and they take it out of the system really quickly. Just a point of view.
Yeah. But I'm quite sensitive on the Erwin's point. If
I think
all the payment systems, all payments need, which payments are better to be instant and which not, because it makes the difference. Sorry, Harry.
Well, I was going to say, I mean, it's a truism from my own experience that the faster you make the payments, the faster you have to make all the controls. You know, they must not. You can't think of one in isolation from the other. If you want to make instant payments everywhere, then you must make all your controls instant everywhere. It's you know, just goes hand in hand, and it isn't straightforward. Because, as you say, the speed of circulation, the potential for departure is higher. So I was going to pose a slightly different thought. I mean, today you talk about risk of concentration, and I think Susan highlighted there's strange risk of concentration, unintended consequences sometimes of some of these things. You end up with concentration risk in some closed loop solutions, which are not anticipated, and Susan highlighted some. And today, I mean, there's a plethora of ways of making international payments, whether it is through SWIFT, bank-owned solutions, money transfer operators, sometimes cards. There's also there are risks obviously in some of the concentration pieces, but there's also a risk of fragmentation, of huge numbers of bilateral solutions which are actually adding cost and achieving the opposite of what one is trying to achieve. So I think there's a balance to be struck between having an open and standardized approach, which allows everybody to if you like,
choose its position,
and then have different options, and then competition will work stuff out within a. But I think that's also a big plea from many players: is let's have a level playing field, so that if something is better, it's not a hidden arbitrage of some rule that nobody is sort of being open about, and it's just not seen.
Okay, many thanks to Susan, Erwin, Harry. Really many thanks. Quite informative, quite useful. I see Ron Bertsen on the screen, and before leaving the floor to Ron, just another housekeeping point. Some people asked if the presentations that were delivered today will be made available. The answer is yes, provided we get the consent, the permission from the speakers, for sure. In case we get this permission, they will be posted on the Banca d'Italia webpage dedicated to this conference. It's in the G20 session of our website for the people who are interested in that. And now we come to the wrap-up session of our discussion. Ron Bertsen will have it. Ron is professor of financial market infrastructure at the Tilburg University, and among other things is also an independent non-executive director of two primary European CCPs, which are LCH Limited and LCH SA, the British and the French one. Ron was also a member of several ECB payment system committees in the past, and at the BIS level also, where we met again, and like Mark and Fiona before, and we had the opportunity to discuss many issues there. So I hand over to you, Ron, for the final discussion session, please. Can you hear me? Ron, can you hear me? I see a problem with Ron.
Professor Bertsen, can you hear us?
Ron?
You should please log off and maybe try and use Chrome. not Internet Explorer. He's speaking, but
we don't hear you.
You need to log off and log in again. Sorry about that.
Good. Operational risk. Sorry for this inconvenience. We'll try to resume Ron as soon as possible.
Okay, we can see you again.
We can see you again.
Professor Benson, would you like? Okay, you're muted.
No.
Can you try again? Can you hear us?
Can you hear me?
Yeah.
Yes.
Now, yeah. At last. Yeah.
Hi, Claudio.
Hi,
Good to
Ron.
see you.
Yeah. Nice to meet you. I spent few words to introduce yourself, your activity. Did you hear me or no?
No, I didn't.
Okay, yeah, your position now at the LCH Limited, LCH SA, and your role as professor at Tilburg University, and our previous meetings at in the ECB committees on
Yes,
payment
many
systems.
meetings.
Yeah. Now, I hand over to you, Ron. Yeah, for the final wrap-up discussion, please.
Well, thank you. Thank you very much for your kind words, Claudio. Is it possible to share a few slides? Let me see if that works. I see a share button. So bear with me one moment, please.
At the bottom of you can find the share button.
Oh,
and
yeah.
Okay, great. Now I think you have to swap screens. Do you have double screens, possibly?
No, but it's copying. You can only see part of it.
We can see it. It's a bit small.
It's a bit small. Okay.
Otherwise, you can click on the share button on the top of your screen. There's File, Edit, Share, and from there you can select the PowerPoint or the application you're using. Yeah, PowerPoint.
Yeah, I've selected PowerPoint, but it's still not
But I guess we can go on like this, Ron.
You can go on. Okay, sorry about this, but
yeah,
we have to get started at the end of what must be a long day of discussions on cross-border interlinking or fast payments. So thank you very much for having me to have some final remarks on this and to see what we have learned from all this. I think it has been a full day with a lot of things that has been happening, and let me try to explain this to you in the use of my favorite metaphor of the financial industry in terms of payment and settlements, and that is the warehouse. What I do also with my students is to talk in financial market infrastructure language in terms of a warehouse where retail payments, large value, and security derivatives are all interlinked and combined to each other. And a stylized version of that warehouse that you see here is on this slide, where you see the various FMIs and also the ones that have been talked about today. And using this warehouse metaphor, I'm trying to capture the things that we saw today, where we stand today, and where we will go in the future. So what we have seen is that many countries are modernizing their own warehouse, so to speak, their own financial market infrastructures, ecosystem. For example, what is going on in Brazil on the PIC system, I think we have seen what they are doing. They are doing, I think, good work on this compared to other warehouses where people are also increasing settlement speed, instant payments, of course, but they are increasing availability over time. And these are all things that are happening, let's say, in the last 5 years. Most warehouses are standardizing to international standards, ISO 20022, and I think the SWIFT GPI initiative can also be shared under standardization, given the ubiquity of SWIFT and the many market infrastructures that they connect, and also many warehouses that they connect. And last but not least, of course, we have our supervisors and overseers, and I think we see harmonization over the various warehouses there as well, because of the principles of financial market infrastructures, be it that they are implemented in soft law, so they stay principles, or where they are put into hard law in EMIR and other jurisdictions who have put that into binding requirements for FMIs. We've seen the example of CLS, and I think in terms of the warehouse, you can see that CLS connects 18 warehouses. There are 18 currencies, and every warehouse has its own, every currency has its own warehouse. And it's not only fiat currency that we're talking about here, but also cryptocurrencies or stable coins can have their own warehouse as well. I will come back to that in a minute. So here you can already see the first cross-border aspect of CLS, connecting via the large payments floor. So the middle floor where large value payments are, where central bank money is located. You can see how CLS connects that. But of course, cross-border payments need to happen also on the lower floor, on the retail side. And there is some room there to do work as well. I think we have seen Buna, the multiple warehouse connector, so to speak, in the Arab region, where you can also see a infrastructure that spans the various warehouses with the various different currencies in that region as well. I think we talked a lot about the proof of concepts, demonstrating how you can connect two warehouses. We have seen the TIPS and Buna example, linking the euro and the Jordan currency warehouse. And we have seen earlier this morning on Pay Now and the Prompt Pay linking Singapore dollar and the Thai baht warehouse as well. And so what you see in the last couple of years is that there are more and more connections established between the various warehouses. And I think that's an important aspect of cross-border payments. And I think looking a little bit into the future, but also as a general type of connection, I think you can describe the Nexus proposal by the BIS as a kind of protocol how to standardize the interlinking between the various instant payments initiatives in the various warehouses. And I think that is very important as we will go forward to see what we need to do in the future. Because where are we going? And here I would like to take a step back, also a bit of today, and have a kind of more fundamental view on our payments business in general. Because what would happen if we would see our whole world as one payment network? And I draw a little bit on the work done by Luca Acero, who presented this paper, this preliminary version of the paper together with other authors this morning. Because if you look at a payment network, you have to view how networks evolve over time. And suppose we would start with a clean slate, and you only have a few nodes in the world representing a payment in the network. And suppose we would then let that network grow over time. What would happen? What type of network would we get? And suppose that the network is divided over a couple of countries. Would we end up with a perfect homogeneous network where every node would be equally linked to the same number of other nodes? Or would we have a kind of construction where you have the connections where some nodes are very heavy, have many connections, where some nodes have very few connections? And so there is this visibility of a kind of map with large and smaller dots on it. That experiment has been done in work by Garrett and Timmerman a couple of years ago. They had this simple algorithm where they grow these type of networks. And if you look at these networks, when you start with a couple of nodes only, let's say 3 or 4 nodes, and you have certain rules in it, then you will see that you always generate these type of networks. And depending on the specific protocol, which is not of consequence here, but if you would look at it one way or the other, that you would end up with these type of networks. And what you can see is that these networks are not homogeneous. You can see that there are some nodes, here are circled in red, that have really a central role. And that would be the role that an FMI would play in a certain network. But as I said, we were looking at the world as a whole network, so we zoom out even further. If these nodes are all countries, then you would see that some countries will be more linked than others. And some countries will have a few connections only, because they trade less internationally, because their currency is not so much used, or because there's simply less traffic between that country and other parts of the world. The same would be here. This is a co-periphery network. That doesn't matter. The same messages. You would have some nodes in between who would be very heavy and who would be very well connected together today, for example, with your major currencies, or the ones that are the currencies that are in CLS, for example. So these are the view that I have when we are looking at the future state of our cross-border network. It will not be a clean network. I think it will be a network where you will have many different examples of nodes connecting, of interlinking, and rather than have a clean FMI type of organization that you would normally have within a country. So this is also, I think, one of the conclusions of Luca Acero's paper this morning, where you would have a kind of a hybrid network interlinking those type of FMIs. Some of the things that we need to consider is, are we talking here about batch or individual processing? I think the traditional CLS PVP system is an example of a batch system. If you look at TIPS, for example, it's a typical system where you would have individual processing. And of course, most RTGS systems in the world are individual processing as well. But if you would change from batch to individual, there would be huge liquidity implications. And I think that is something that should be taken into account. Because if you are denetting some of those institutions, you would need a lot more liquidity compared to what you do nowadays. So if we would like to see cross-border payments grow, and I think that is a common goal that we have today, I think you need to look at that type of implication. And then the peculiar thing that is we have with cross-border payments, it always involves two currencies. Unless we would move to a single world currency, then of course that problem does not exist. But as I said, given the way how networks grow over time, that's not going to happen. We will have this scattered type of connections where you would have multiple currencies, fiat currencies, but even cryptocurrencies next to that as well. And then of course we have the fee problem and the FX problem. The fee problem is, do you send the fee with the payment? That makes it difficult to see what the exact amount is that will arrive at the other end. It's the traditional correspondent banking problem. Or do you not send the fee with the payment, but then you need to have a kind of interaction and contract how you would pay a kind of flat fee, for example, that could then be different from the payment. But then you know exact payment, but then you have to do more work on your fee structure. And of course, you have the FX problem, price exchange every second, which is the right exchange rate to use. And here is, of course, if you look at how central banks have evolved over the last 20, 30 years, I think what you have seen is that they have tended to make their systems as financial risk independent as possible. So if you look at the RTGS revolution, what it essentially did is it would take out netting risk and unwinding risk that we would have when we used to have deferred net settlement during the day. Moving to RTGS would fix that. And so central banks have moved towards systems where there is operational risk, but not so much financial risk. The financial risk is put out to the participants, but not so much more in the central system themselves. If we would have this FX problem where we would link cross-border systems, I think then we saw some discussions and some solutions today how to tackle that FX problem, especially, of course, if the time between the one system processing and the other system processing in the other currency is very short, which can be done. We have seen the proof of concepts between those two currencies. In a matter with below 60 seconds, you can do that. Then, of course, the FX problem is solvable in terms of volatility. But, of course, it still needs to be solved in terms of how do you actually exchange this exchange rate and how can you make sure that you can pay in an exact amount. Because I think that's also one of the requirements that we would like to see in cross-border payments. You want to have certainty on either the sender or on the receiver side of the exact amount. And then there are challenges of cryptocurrencies. Not so much I've seen that on the program. Of course, we saw the chief delegate of the Indonesia Central Bank talk about CBDC. I think that is a challenger that's coming from within, so to speak. And of course, we have the external threats of cryptocurrencies and stable coins. And I think one of the good aspects of them is that they tackle the cross-border issue almost naturally. They are always open. You can connect to them everywhere in the world. And they have devised many ways of exchanging. Or have they? Because if you really look at them, then you can see that most of the problems that the traditional warehouse is facing are actually also faced by stablecoins and cryptocurrencies. The way that they are not so prominent there is because of the high volatility. And the volatility is so high that normal considerations of fees, etc., are dwarfed by these huge changes in the prices, for example, in the Bitcoin or the Ethereum network. So although they claim to have these atomic swaps, if you look at it a bit closer, then you can still see that the real problems, and with the real problems I mean the two bullets above that, are still not really solved by most of the solutions that I have seen on cross-border payments in a distributed ledger technology or cryptocurrency context. Another hard problem, at least in principle, is if you want to have instant payments cross-border and you need to comply on both sides with the Know Your Customer and AML regulations, that can be very difficult or very hard. That's also, I think, an aspect that we need not to forget, and I think it's very important as well. But it's also adding on to the technological challenges that we see. Now, I don't want to prolong too much. We are already almost at the end of the day. So this is my last bullet where I would like to end with a question to all of you. And that is basically, is attaining a fast, safe and cheap cross-border payments, which I think is the goal that we discussed today. Is it really a technical challenge? Or is it an economical, business or political challenge? And I think here that is something where the G20 could indeed work and will work. And I think if you look at the plans, they are going to do this. It is that the political challenges should be overcome. And I think that the only way that we as a world can do that is at the level of the G20. Because I think in the end, it's not about the technological problems that divide us, because we can conquer that. We have seen proof of concepts. We have lots of payments experts around the world who can solve these type of technical problems. It's more about harmonizing the business rules, and it is more about the political challenge in making sure that supervisors work together with policymakers in order to make sure that we can tackle the political challenges which are inherently in cross-border payments.
This is exactly the sort of issue that we discussed during the panel, Ron. Exactly this
then
one. Maybe it's yeah.
And I anticipated that well. Thank you.
Yeah, I mean, maybe it's a combination of the three phases of this prisma in a way. I don't know. Yeah, but the political dimension is there for sure, especially in some contexts, the geographical contexts that are in the way of experimenting maybe for the first time an interconnection and interlinking process, which is not not everywhere so practiced till now. Many thanks for your presentation, which shed some light on all the issues, all the relevant issues of the topic we are discussing. I don't know if there is any question. I don't see.
I'm happy to take any questions, of course.
Yeah, sure. On the Q&A box. Okay. I wouldn't reiterate to you, Ron, the points that I made during the panel. One interesting point was discussed at the end, interesting from my perspective, from the central bank's perspective, that you know quite well for your previous experiences. This question: where is the market going? Is the market overall going towards a concentrated versus fragmented setup? Because this has different consequences for the regulator, especially for the central bank interested in preserving financial stability, market integrity, and so on. Harry Newman correctly pointed out that there is not only a concentration point, but that could be also a negative outcome in terms of fragmented markets. and technical solution and governance models and so on. Having you different viewpoints, you can.
My answer would be, thank you, Claudio. It is a very good question. My answer would be both. So the market will be concentrated, and fragmented. And that is because if you look at the cross-border structure as a whole, you will see some of the links are very well connected, and people will tend to use some system as a preference over the other, and that would be a centralizing part of the network. But there's also parts that people will use their own local solution, which will be interlinked, and there you can have a kind of fragmentation of the market. So I think if you look at it from a perspective of each local market, and the local market being in one currency, in one warehouse, so to speak, you will have centralization there. But if you look at a higher level, you will see that there's still fragmentation, even if some concentration can happen even on a more regional or even global scale.
Yeah, which could be not an optimal outcome from the central banker viewpoint when it comes to the cyber risks, for instance, issue, because cyber risk is something that we are in a way running after. The sense that technology is faster than the standards and the legal provisions that we can draw and can approve. And so having a jeopardized landscape in a way with big operators, big technological players, fintech, GAFA, we know, together with a more fragmented landscape environment somewhere else is even more challenging for us. In terms of operational risks, namely cyber, but not only cyber.
I think that's exactly right. I didn't mention explicitly this challenge as well because I only had a few minutes, of course. But I think it's very important to have the cyber risk on your radar as well. And I think there I see an interesting possibility where traditional financial market infrastructure setups would meet the DLT resolution, because I think if you look at the underlying blockchain technology, that is something that would be really be useful to scale and to use and to build FMIs on top of such a structure. I envisage a central bank that has branches in the country, that every branch will be in its own node, connecting throughout the whole country your FMI, and it will be very difficult from a cyber perspective to get any node down, which would, in the same way as the resilience that we see in the Bitcoin network, would then be possible in an FMI network. Of course, without the whole cryptocurrency thing, but just as a database concept, I think DLT is a promising technology. We have seen proof of concepts in the industry that they can be very fast if you don't do the proof of work consensus mechanism, of course.
Okay, many thanks, Ron. I don't see any... Yeah, we are now at the end of our webinar today. Let me thank again all the speakers and participants and for their participation, for their contribution, but also the organizing committee. We were not seeking a sort of one-size-fits-all solution, which is impossible for the different interlinking issues and differences that we discussed today. But anyway, we had valuable inputs, valuable proposals, and overall quite important and useful contribution to the discussion, to this work in progress of evolving cross-border payment landscape. So thank you again, all of you, and let's keep in touch for other useful meetings of this kind. Thank you.
Thank you.
Bye. Bye-bye.